Welcome back, traders, to my market outlook in the index futures for the week of September 29th. Now I have the weekly chart pulled up for S&P, and we can see last week we made a new all-time high and created a weekly BISI. Now whenever the market is trading at all-time highs, it gets more difficult to trade because we don't have buy-side liquidity or inefficiency targets to aim for. Also, with this week being non-farm payroll week, I would recommend being cautious and not risking a lot of size. Now with that said, I want to be neutral, but I'm still slightly bullish because we've traded above this large down candle and created this fair value gap. If you look at the wick on this candle, which is a weekly order block, I've extended it forward and it lays right in the middle of that fair value gap. So even though I'm slightly bullish, it's perfectly reasonable for price to come back down to this inefficiency in order to reaccumulate. So starting off the week, this is going to be my first expectation. Now in order for price to stay bullish, I don't want to see it go below the wick of this order block, meaning I want price to stay mostly in the upper half of this fair value gap, and I definitely don't want to see this entire fair value gap get filled in. Otherwise, we could potentially have a shift to the downside. Taking a closer look with the daily chart, I see that the weekly wick is essentially this daily wick. Also, this up candle here is going to be the most important daily candle for me, even though there aren't any inefficiencies around here. But because this is such a big and obvious up candle, and it's the candle that took out the previous all-time high. So with all these confluences here, I think it's going to be super important that the middle of this fair value gap is respected. Now, if price goes below this fair value gap and trades below this daily candle, then I'll start turning my attention to the downside. Moving on to Nasdaq, on the weekly chart, I've been calling for this weekly CIBI for the past couple of weeks. Last week, price wicked up here, did not fill the gap completely and closed below it. Now, I see this inefficiency and I see these equal lows. So I'm anticipating price to eventually come back down here to take the sell side liquidity. However, I don't want to call the top because we're currently still bullish from a technical standpoint. Like ES, Nasdaq has traded above these two down candles and created a weekly BISI. So there is a potential for Nasdaq to trade higher, but first, like S&P, I'm going to look for a retracement back into this fair value gap. Here's my daily chart for Nasdaq. It's very busy, but I'm going to zoom into the most recent price action soon. I just want to point out this daily volume imbalance and how I'm extending it all the way through. Now zoomed in, we're currently in that daily volume imbalance. I'm watching to see if this is going to play a significant role to support price and bounce it up. And if it does, I can target half of this wick or even this swing high. But if it doesn't and we start trading through lower, then I want to see if this is going to play a role as resistance in order to drop price down to that weekly BISI. Now, if you've seen this daily implied fair value gap on my chart before, it lines up closely with that weekly fair value gap, so I'm going to defer to the weekly fair value gap and remove this just to clean up the chart, but I'm still keeping this in the back of my mind. Okay, so if we start to trade below this volume imbalance, I'll look for price to retrace back down to the weekly fair value gap. Now in between, there is a small daily volume imbalance right here. I've drawn this out, but I don't expect this to be a turning point, but more like a pit stop before continuing to the weekly fair value gap. Now once we reach this weekly fair value gap, if we're going to continue bullish, I would like to see price mostly stay in the upper half of this fair value gap and not really trade to the lower half. I would want to see strong displacement to the upside, and then I will aim for half of this wick or even this swing high, whichever one is still intact. Okay, so I've given you a lot of details on how I will outline the market if it's going to continue bullish. But let's think about how the market can move if we're going to have a bearish shift. So starting from where we're at, if I was bearish, I would say that we could trade up to half of this wick. Now I don't want to see this swing high get taken out, because we've already worked in the lower half of this fair value gap on the daily chart, and I prefer we just leave it there. Then I want to see price trading down and going through the weekly fair value gap. I want to see price coming back up and use that weekly fair value gap as inversion and I will aim for these lows down here and potentially this daily BTC. So I've outlined both sides of the market because we're at a point where we can go either way. So I think it would be wise to be open-minded and not commit too strongly in either direction. I'm long-term bearish, but we're technically short-term bullish. Also remember, we can potentially just go sideways. And with this week being non-farm payroll week, I would definitely reduce my risk if I'm even going to trade at all. I might just take the week off and just let the market show me which direction it wants to go. But that's it for me this week. I hope you leave me a like if you got something out of this video, and subscribe if you haven't done so yet so you don't miss out on any market updates throughout the week. So until next time, safe trading.